Bitcoin just did something it hasn't done in months. It beat the stock market. And at the same time, its volatility collapsed to some of the lowest levels we've seen all year. That is a strange combination, and it is exactly why today's breakdown matters. Let's dig into the numbers and what they actually tell us. Part 1. Where Bitcoin actually is. First, the price. Bitcoin is holding right around $64,000 as of today. It closed Monday near $64,000 and has been stuck in a tight range around that level. Here's the part that gets missed. For months, Bitcoin kept lagging the S&P 500. That was one of the biggest narratives of this year. But on Monday, that changed. Bitcoin rose about 2.5%, while the S&P 500 fell about 0.5%. A rare day where Bitcoin actually outperformed Wall Street. Before anyone gets too excited, take a step back. Bitcoin is still down roughly $55,000 from a year ago. We are in a genuine correction, not a bull market. This is stabilization, not a party.
Part 2. Why the volatility collapse matters. The most interesting thing is the volatility. Bitcoin's 30-day realized volatility has dropped to some of the quietest levels in a long time. The asset closed essentially flat month over month. What does that quiet mean? First, it usually means the heavy selling is done. The panicked sellers are out of the way. Second, quiet periods rarely last. In Bitcoin's history, stretches of low volatility are almost always followed by sharp moves in one direction or the other. Third, for traders, this looks like a compression phase. These low volatility ranges tend to resolve with a breakout. The only real question is direction.
Part 3. What's happening around Bitcoin? On the adoption side, we're still seeing institutions move in. Japan's company MetaPlanet just transferred 2,100 Bitcoin as part of a plan to build a U.S. Bitcoin treasury. On the risk side, the backdrop is getting complicated. There are fresh tensions in the Middle East, and crypto-linked stocks actually fell in pre-market trading, even while Bitcoin held steady. And there's broader regulatory churn, too. Reports say JP Morgan ended its banking relationship with the prediction market platform Polymarket. Part 4. The bull case versus the bear case. There are two camps, and both have real data. The bullish camp points at Bitcoin's long-term moving average starting to tilt up again, and at that rare win over the S&P. They see collapsing volatility as a quiet accumulation phase. The cautious camp points to on-chain data showing Bitcoin has been losing ground to the S&P over the longer horizon. If relative strength keeps fading, that suggests capital rotating out of crypto risk. Both cases are credible. An honest read weighs the evidence rather than the outcome you want. My checklist. Watch the $64,000 level. If Bitcoin can hold it while stocks wobble, that relative strength is real. Watch for a volatility squeeze, because a compressed range won't last, and a breakout cuts both ways. Watch the crypto stock divergence, because when the underlying asset is calm, but the equities wrapper is falling, that tells you who carries the risk. And respect the structure over the noise. Bitcoin holding 64,000. Volatility collapsed, finally beating the S&P on a down day. That's not a scream, it's a whisper. And in crypto, whispers usually precede the loudest moments. If this was useful, hit like and subscribe so you catch tomorrow's breakdown. This is not financial advice, it's education and data. Do your own research. See you next time.